All right, welcome back for the episode of Carnivore Trades. Today is Monday, October 16th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it today. So markets here, basically a gap and go day. So we did gap up, 30 minutes, opening range break, and then we just kind of stalled out here. Where did we stall out? Right at the 43.80 area, right? We've been stuck there for the last week or so, last trading week rather, last 5 days. You can see kind of right next to that gap and below the 50 and 100 moving average. So we may be building up pressure to break through that. At this point, you've been here 5 days now, so I would expect this gap to be minor. If we had come up into that gap, into this 50 MA, say Thursday, oh, that would have been a short, right? But now you're kind of consolidating sideways. So if we do push up into that, it's likely not going to be as major. It doesn't mean it can't hold. It just means it's more, it's more likely to be able to break through, right? You're building compression here. So, but right now, gap and go day. We'll see what they do tomorrow. It is OPEX week, so it wouldn't surprise me for them to whip this back down. Certainly could happen. We did leave a pretty, I don't really like this gap here on the chart. And I never really thought this was much of a healthy move. So you just didn't really build support here. Left a really fat gap too. And we did have a mini flash crash, which does help get out, shake out some weak hands. But and you did essentially fill this air pocket here, but there's still a big air pocket down there. And we're in an environment here where lots of geopolitical stuff going on right now. And we're in earnings season. Something negative comes out of China or Israel or something like that. Overnight, they can easily slice this right back down. So just be aware of that. That said, I don't think we're going to see a ton of downside here. Like I said, it's an OPEX week. We saw some VIX, hedges get closed out. So the VIX had that up a minute ago, down 10% on the day. And that's normal when you have a weekend after a big sell-off on, say, geopolitical fears that don't ultimately escalate over the weekend. Like, it's not like that. Yeah, some things happened, but it wasn't like major escalation, and that's kind of that was the fear. So we saw those put hedges get closed right on the open, and you see the market rally up again. So it's kind of not to say that it's a hot air rally, but I don't like that gap. But at the same time, I'm not expecting, if we go down there and fill it, I'm not expecting us to absolutely puke here. It is OPEX, so keep that in mind. Max downside here right now in the short term, well, you have some support at 4,300 whole round number, but this would be your big level here, right? This was you started to put in a little bear pattern here inside bar, and then you broke above that. So right around here, 4,270 would be kind of your big support level. If you guys follow the spiders, we're looking at, 425, 426, right in this zone. If you put in a higher low here, if we come back in and put in a higher low, I think this market's actually poised for another push up. If we just hold up and flag here, there's nothing to say we can't just push up anyway. And max upside right now, I would say, is right into 444, 445 on the spiders. So that's just for this leg. And in fact, if you just take great technique, really simple one. It's one I teach in my Carnivore course. It's a simple measured move. And you just duplicate that, it takes you right up to the high there. So that could certainly play out, assuming nothing. Again, we have earnings season, there's war going on, so there's always that chance that we get a big outside move. I don't really see that happening this week, though. It would probably come next week if that's going to be the case. But again, markets are holding up here, and we'll see what we get tomorrow. Again, they could fade this whole move tomorrow. Wouldn't shock me. But I do think downside here is limited, and as long as we stay in this range, we should be okay for potentially another pop. Now, a little dynamic change here. The triple Qs, technically they are, 1.29%. They are technically up more than the spiders, but on a relative basis here over the last couple of days, they've underperformed. And I think that the Qs have just kind of put in a short-term high. So we kind of need sectors, other sectors to catch up. One being maybe healthcare, banks. Take a look at the transports today having a big outside move, although it's coming back in, but still up 2%. That needed to have a big move like that, which we'll talk about in a minute. XHB also having a nice pop today. So some of these other sectors, XLP, even utilities getting a bid back above the 20-day moving average. some of these non-tech sectors, and I've been talking about this a lot recently, like eventually if this market's going to continue to rally, it's got to come from something other than big tech, right? And we're seeing that rotation, so that is a positive for the market here. But again, triple Qs, again, into that trend line. I do think that is the high for now. Doesn't mean it can't inch up a little bit, maybe pierce the highs. I would say 380 is, if we get through that, that's going to be pretty stiff resistance. But I think we could be in a situation here where maybe the spiders inch up a little bit more and the Qs kind of stay in this range. And you maybe see the Dow and the Russell start to pick up a little bit of a bid. But in any case, Qs pulling in off that trend line, and I do think they are consolidating. Speaking of the Russell here, so big sell. This chart is in a lot of trouble. It's up 1.7% on the day, so that is the big winner. If we get one more downdraft in this market, I do think it fills that head and shoulder target, though. It's not that far away. Again, nice measured move there, 165, right in that vicinity. It is pretty beaten up already, and you're already into basically 52-week lows. But it's getting a bid today, and we'll leave it at that. And it needs to really get off the canvas here, get above that 20 moving average. Then we can talk about maybe getting up to 180. Dow getting a nice outside move today. That's up 1%. So kind of gap and go above the 200 MA. So that's a sign of strength there. I think this can get up to 342, 343 in the near term, maybe even 344. So right in that area, that would be your head and shoulder neckline. Again, that never really played out to target. It got close though, and then it kind of failed here. This little bear pattern started to fail, just like the one on the spiders. But we'll see what that does going into OPEX. We could, who knows? We could pump up today and then we come right back down. I've seen that happen plenty of times during an OPEX week. Semiconductors here having a decent day, up 1.3, although still kind of underperforming relatively, right? So like, look at we had a big pump and we're basically just barely outside of that opening range candle there. In fact, we're inside of the 30-minute opening range, well, outside of it by a few pennies. So really all of the gains was done in the first 10 minutes. But again, it's up on the day. We'll leave it at that. Still got a resistance up here at this pivot. If you get through that, there's a lot more at 156. So I'd say upside here is limited, but it's holding up for now, and we'll leave it at that. IGV also getting a nice bid today. That's still holding up really well. I got to say cloud software is having a really strong year. Again, this trend line here held up on the weekly. You could even make a case, I know there's a lot of lines on here, but we'll put a couple more. We'll change the color here so we can make it a little less on the eyes. That's not the one I wanted to change. All right, I'm going to draw a wedge here. Hold on. So there we go. So you could make a case you got kind of like a tightening range there on the IGV. So watch that. So good pattern there. So resistance still around 360, gap window, and then your gap fill up there. Starts to roll over, then watch that trend line. So pretty simple there. But yeah, IGV tightening range, that's really been really strong all year long. Dow Transports here, we talked about a minute ago, up 2% on the day. It had to happen, right? I talked about this over the weekend. You can't let this low go, otherwise you're going down to 14,000. Needed to have a big pump today, and it got one. It is off the highs here in the afternoon, but still holding most of the gains. And we'll give it the benefit of the doubt for now. You need to get above these pivots here, and then you can try to make a run to 15.5. All right, interest rates here. So we got to talk about Bitcoin too, but we'll talk about that at the end as always. But take a look here at interest rates. So the 2-year holding up, and again, this is another kind of minor red flag. It's another reason why I think that the market could come down tomorrow is yields are up across the board today, and the market's acting like they're down. So that's kind of been the opposite case. Now the dollar index is down, so maybe that's kind of the split there. But if if yields pump up to, if you see the 2-year pumping back up to these highs tomorrow, and the 5-year, above 4.75, and the 10-year back above 4.75 tomorrow, I think the market's probably going to have to start to pay attention to that, because you're talking about, if you continue to curl back up, the high is not that far away here on the 30-year. And, if that gets taken out, the market's obviously going to panic. So just something to keep in the back of your mind here. Trend is still up on yields. I still think there's a good chance for a lower high here. It is holding trend though, and you got to respect it. Lower high could take you down to this area, and there would just be a correction. It's not a major long-term top, but it could be a little correction there in yields. But again, they're holding up, and again, if we're up big tomorrow, I don't think the market's going to be able to just hold these gains so easily. Well, we'll see. All right, XHB. So that got a nice bid up just under 1.5, still below that 20 moving average though, and inside of this red. So if this continues sideways, you can make a case this is still setting up a bear push, bear base for a push down to that 70 handle. There's a lot of weekly chart support right there. This is where you broke out. So tons of support. Look at that green bar. That's a breakout bar, impulsive breakout bar. You got a lot of moving averages down there as well. So that's the area of interest I have on XHB, but it is up today. VNQ, nice move here. So this is actually putting in a possible higher low. You're above that 20 moving average now. Now you got to take out this high here and you confirm that short-term trend change, and you can get up to 78. So that's a possibility there for the VNQ. There's your trend line, 78, maybe even 80 on the, on an overshoot there. But again, this chart's in a lot of trouble and it needs to get off the canvas again. The only thing that I can see bullish about it is that it's possible that everything's priced in, right? Because everybody's already beaten on this thing so hard. And we know what's coming with commercial real estate too. So that is obviously looming around the corner, but perhaps there's enough shorts in this. And obviously this is not participating in the rally. It's red for the year, and it's red on a 52-week basis as well. So completely not participating in the rally. You could make a case that some of this is priced in. Anyways, XLF here, up 1% on the day. I think Schwab reported earnings this morning. Yeah, so Schwab actually holding up 5% there. That, again, that needed to have a nice outside bid. This has got to get above 55, 56, and then you can go to 57 there. But the XLF hanging in there okay. Still don't really like these bank charts. JPM, not a good follow through on that earnings gap. Same thing with Citigroup. Wells is holding up okay. That one's hanging in there. But the XLF still struggling with this trend line here. If you can get through that, 34 area, will still be some resistance, but nothing to say this doesn't pull back and put in a higher low there. KRE obviously getting a bid. Sympathy play to Schwab there. Same thing with KBE. And broker dealers here also getting a pop. That can still get to 490 and then possibly 500 if we get through that. Crude here pulling back off of the 20 moving average. That's helping out the transports as we talked about. So big surge Friday. Obviously no follow through with the escalation. Crude pulling in. Nothing terrible, right? So it's it's just kind of in the middle of no man's land. Resistance, support down here. You're in the middle of that. I don't see it getting much through 90 currently, but we'll see what kind of pattern it puts in. If this can flag, it could have another little push up. XLE is green on the day, and that's holding up okay. Still got resistance around 92, but this pattern is way too sloppy for me to do anything with. XOP is stronger. That's into some resistance now with this red bar high, so watch for that one tomorrow. And then OIH also holding up, but that is red on the day. Nothing terrible, nothing great there. I just don't like that big gap. CCJ still kind of setting up this kind of bear pattern here. So down move, inside action, and a weekly pattern. I don't like how we negated that breakout bar. So CCJ under pressure here. I believe that is in correction mode. URNM also slipping. That'll have some short-term support at the 50-day moving average. Your bigger level here is right around that 40 handle. And then through that, it's 37.50. So I'm avoiding uranium right now. Again, we talked about this. I talked about it ad nauseum. Like, there's lots of euphoria here. Don't chase. Don't get FOMO. And you can see here, 49 down to 42 in just about 2 weeks. So 2 or 3 weeks there. But uranium continuing to pull in. Nat gas pulling in as well, though it did come nicely off the lows. You could make a case. It's kind of like a 20 MA test. It's kind of like a 20 MA kiss. Got a little oversold on some of the shorter term time frames too. So started that bounce early. But again, you're basically back testing the breakout. We'll see what this can do tomorrow. But nice pullback, big move, 25% in 5 days. You're going to have to digest some of those gains there. Nat gas, dollar index, 106.20. So pulling in a little bit, we talked about this again. This trend line, it's kind of getting violated here. I don't know if it's that good anymore. But we'll see what it does tomorrow. If it still has room to put in a higher low here and consolidate this little pop from last Thursday. And if it does that, it can push up. If this takes out this pivot, I think you get yields to top out in the near term. So again, I talked about that a little bit here. But we'll see which one of them's lying, right? The stock market is green today, and yields are green too. So one of them is going to have to pick a direction tomorrow, and the dollar's down. So we're going to have to pick a relationship here before too long. Gold here also getting a pullback. I talked about 1950 as resistance. We got there Friday. stall out day, nothing terrible here, just a little inside day after a big surge. If this can pull back and flag, it can go higher and it can go to 2000. If you get any sort of de-escalation, which I don't think is going to happen, but if any of that stuff does happen, gold will come back down. Sometimes it gets hit for OPEX week too, so keep that in mind too. But inside day, no problems there. Silver inside day, same analysis, no problems there. If you consolidate here, you can get to 23.50 and 24. Platinum also holding up okay. That one is very attractive down here. And palladium still needs to pierce 1100. Copper, I still think needs to go to 340, maybe even 330 at this point. Not a great pattern there. All right, Bitcoin here. So that was kind of dominating the news today. And they even faked out Walter Bloomberg. I was talking about this in my Discord chat. I said, embedded Walter Bloomberg's tweet of, SEC approval. And one of my members said, "Oh, what if it's fake?" And I was like, Walter Bloomberg doesn't report fake stuff. And it turned out to be fake 5 minutes later. But notice, look at this. So this is how hard they went into make securities fraud, right? So look at the big surge, and there was like 2,000 futures contracts bought. This is obviously just Binance, but even on Bitcoin futures, there's about 2,000 contracts bought at 1 a.m., right? Then at 9:30 a.m., fake news comes out, right? So who was buying right here, right? Just to release a fake report and, make 10% really quickly in the futures market. You gotta love it. And I'm sure they'll get a $1 million fine. And they just made like 10 billion in money. But in any case, I talked about 30,000, right? So I said, if this inverse head and shoulders plays out, it's going to 30K. What was the high of the day? 30,127.96. But it's holding up. I don't like how we had this green bar. We failed that bullish inside bar. I've also said I don't trust any move in Bitcoin because the liquidity is too low, and this is exactly what I'm talking about, because we've had failures, right? This was a picture perfect pattern and it failed. Then we had a nice bear pattern and then that started to fail, and then it kind of tried to play out and then it failed, and now we have a bull pattern that failed for 2 days and then it popped the other way. We had a weekly bull pattern I can't trust, when I see this many failures and this whipsaw, I can't trust the moves. What I can say is that if you close above this red bar on a weekly, it's probably going higher. And the positive is the same thing I've been saying, is that's the monthly chart is holding up just fine. But it kind of needs to go soon, I think, if this is going to do it. But it got a bid today, and for what it's worth, it's holding those gains for the most part. I would think, okay, it's a sell the news, especially when that news turns out to be completely fabricated. And you come right back in, but guess what? That dip's actually been bought. So something else is going on here. At least it looks like it to me, but Bitcoin holding up okay. After that pump and dump. All right. Let's take a look here at the spiders really quick. Market's closing about 5 minutes. Okay. So we're closing at the highs of the day. Again, keep it simple. Yeah, and your resistance right now is around 439. You got the gap fill at 438.64. That's becoming more minor the more we consolidate. So the more of a base we build here, the more likely we can push into 444, 445. Watch that measured move. It's about 447 area. If we take out this low, you'll have support at the even number of 4,300 on the SPX. That's about 429 SPY. And then the big level to me is like 425. If that goes, I don't think this 200 moving average holds. And I think we can make one more lower low here. But again, we'll talk about that if and when we get there. It's OPEX week. We've got earnings. And we've got geopolitical stuff going on. So there's lots of wild cards. Anyways, guys, going to wrap up here. You guys take care. Come find me on CarnivoreTrades.com. I'll talk to you guys all tomorrow.